In this video, we are going to be analysing OCGN. If you want your own stock analysed, throw that in the comments. We'll get round to it when we can. Now, to get straight into it, we're sitting around 63 cents. Now, what would be my main focus from here? Now, you can see on both the 6 months, so this chart on the left is a 6-month chart. This one on the right is a 1-year chart. So again, obviously, this is our shorter term chart here. This is going to be our longer term chart. What I do is pay attention to both of these. If these are both trending in the same direction, again, that's a short and long-term trend. So really, I want to be trading that overall trend. And we can see on the 6 month, we're trading down. On the 1 year, we're trading down. So to me, I'm a lot more short bias on this stock. So how do I trade these short bias stocks? Really, I wait for pops to their resistances. And we can see this stock in the past has had kind of multiple quick popping days. So we can see we went, from around $1.25 to around 175, so a 40% move in the day, hit our first deviation and instantly sold off. So to me, that's really the opportunities I'm paying attention to on OCGN. So as resistances, we have $1. If we break that, we have $1.24 or $1.25. Use that as a psychological level as well. Above that, we have $1.47, and if we break that, we have about $1.90. And we'll note one final level around 250. So what these are our deviation levels. These are all key levels. So whether you're a short or long bias trader, you may use these levels a bit differently. Me, as a kind of reversal trader, I'm paying attention to these resistances as short bias levels. And considering, again, it is a small cap stock, is a downtrending stock, usually if they get a pump to the momentum or push to the upside, it's usually short-lived. They'll usually just drop down and push those 52-week lows and continue to downtrend. So to me, on OCGN, if we were to hit this $1, 125, 150, any of these levels, to me, instantly looking to play that reversal trade. Now, the way I do that is by basically paying it the first time it hits this level. The first time it hits this level is the highest probability that we have that will actually pull back off of this level. As we start to pull back, lock in some profits, and then moving my stop to break even. That's how I trade these. Now, if you're a trend trader, you want to, or not even a trend trader, but you're trying to catch it, you're more of a momentum trader, you want to catch the move to the upside, then again, you'll use this level, but you just use it in a different way. And that is waiting for a break above this level. And again, that may mean that we come test it, we fail. That's where you could have got the short bias opportunity. Then we come back to retest it if it breaks through, and paying attention for a test of support. If that holds, then looking to play direction to that next deviation level, which in this case would be about $1.25. And again, that's how you use these levels going all the way up, just waiting for a break, come back to test it as a support, then direction. If it holds, obviously, then we can look to play direction. The first time we come into them as well, if you're a short bias trader, just look to play that reversal. That's how I personally use these levels. But again, I don't know everyone likes to trade short bias. Now, as a heads up, if you're a short bias trader, if you're doing this, day trade only if there's no options available. Reason for that is, again, you don't want to be trading anything like this naked overnight, because again, if it can move 40% in a day, it can move 40% that next day. You don't want to be down that much. You're probably not accounting for that much offside. So from a day trade perspective, okay, fine. If they got no options, if you're trying to swing trade it, they have to have options for me to trade them, because then I can define my risk. I can buy the calls and short the outright shares, or I can just use either two other option strategies, just buy the outright puts, or use a credit or debit spread. Again, these are all different ways to take the options, always going to depend on the premium of the options and how much volume there is. But to me, if there is no options at all, then again, looking for the day trade only, because it's too risky to be holding overnight. Those are the key levels I'm paying attention to. Again, you can use them in your own way, but that's my main focus on this stock. It doesn't mean that we're going to hit them, but it really means to me, I'm only paying attention to the stock if we can hit them. Just to note then, from a support side, we don't have any buy levels to the support side, and the reason for that is our deviations are negative. The reason for that is it's such a strong downtrending stock, the deviations have turned negative. Usually whenever I see this, it will never be a stock I buy long bias, because there's too much risk on that table and it's a lot less likely to work. But what we do have actually below us is at 56 cents, we have our statistical mean on the 6 month. And at 56 cents, we also have our statistical mean on the 1 year. Now that is considered fair value. So what this basically means is, if I was holding the stock, You know, I don't ever want to be buying above this level really, because again, then you're taking on more than the average worth of it. So if I was potentially looking to invest in this company, I know some people trying to buy this company, hold it longer term, and if so, that's fine, but I would really be looking at it below 55 cents. And again, we probably will hit that, or at least at 55 cents. So that would be just what I'm paying attention to if you're trying to buy this stock potentially for a longer term. Now, I hope you enjoyed the video. If you did, why not drop a like and subscribe if you want your own stock analyzed. Again, throw that in the comments. And why don't you check out this analysis video?